Hello everyone, it's your options guy. Welcome back to another video. So in today's video we're going to talk about SoFi. It was actually IPOE, but now it's officially SoFi. And we're basically going to cover what it is for those of you guys that are new coming to this channel. I'm going to talk about SoFi now, or at least for the time being, because I think it's kind of interesting, and it's one of those disruptive type of companies, kind of like Palantir. And basically in this channel I cover a lot of like disruptive type of plays or stocks that I think are like really great in the future, Palantir being one of them. So in today's video we're going to talk about SoFi. And SoFi actually went public today and it did not disappoint. So basically I'm going to cover SoFi, kind of like what it is, and kind of go over like some articles of like what the bull thesis is and kind of like what the risks are and stuff like that. And then also cover some like I guess like open-ended questions in terms of like market cap and stuff, because I know like in some places it still seems like the market cap is still low, and I think that's because of like the whole IPO and like the ticker symbol changing and everything is still kind of using like the old market cap. But yeah, so I'll cover that as well. I'll also go over my portfolio and show you what I'm doing with SoFi and everything, and yeah, just keep you guys updated. But before we get into it, I just want to emphasize that I'm not a financial advisor. This is just me covering like this stock with like my own thoughts and opinions. I'm not giving any financial advice. So yeah, if at any time you like this video, please give a like, hit the like button, like, comment, or subscribe. All right, so let's get into it. So SoFi, basically, according to like their website, it says they're not a bank in a good way. They were founded in 2011. They have a good amount of employees, and it's US based customer service, which is good. And basically this just shows you like a quick snapshot of like their app. And if you take a look, it looks very similar to like kind of like a simple version of like how Robinhood has like the same buttons in the bottom, and then it just showcases like how much money you have. So basically, let's go over here this article, which I think is a pretty good article. Kind of covers like a lot of like points. So whoever wrote this article, they gave it a price target of $30 post merger, which is actually not that far off. I think as of right now we're sitting around 22 or just shy under 23. I'll cover that in a second. But this article is a little bit older, so it's probably like 2-3 months old. But basically they go over like they cover a lot of good stuff here. So anyways, basically they cover how like SoFi started off as from a couple of guys from Stanford, and they basically started this platform to help students with financing loans and managing their student debt and stuff like that. So basically you can see right here, it kind of showcases like everything that SoFi has to offer. So they help you with investing. It's kind of like a Robinhood in a way that they let you buy and sell shares and stuff, even cryptocurrency, I believe. So it helps you with personal loans, student loans, credit cards, home loans, just managing your money in general. So the whole point of SoFi is kind of like to sell you this convenience type of one-stop shop like platform, where you can kind of like do everything all within like this platform or this app. So that's kind of like how they're selling themselves. However, I thought at first I thought it was just that, but it actually does a little bit more. So as you can see here, here's the business segments: student loan, refinance, personal loans, home loans, in-school loans, and then here's the financial services, which is the investing, credit cards, protection, and other stuff. But the thing that like made this stick out even more for me was Galileo. And so Galileo, as you can see here, it says it isn't a bank and it's an irregulated entity, but it empowers other fintech platforms. So basically Galileo, it provides an API to other technologies, and it maintains the ledger, authorization, settlement, fraud. So it does like a lot of stuff. Like this platform is actually really powerful. So the way I can explain Galileo is it sits behind other platforms. So like I believe Robinhood uses it and other platforms as well. So I think let's scroll down here. I know I saw it somewhere here. Let's see, where was it? Galileo provides an underlying structure. Here it is. Yeah. So Galileo offers banking platform / card issuance for over 90% of all digital banks in North America and over 70 of the top 100 fintech companies. So clients include Revolut and Robinhood, according to public available data. So that's pretty powerful. So I believe basically Galileo makes money as these, like, because it sits behind these other platforms. So these other platforms are using it, and it kind of makes, like, I don't know if it does like a transaction type of fee or something like that, but like based on like the more that these companies use Galileo, then the more Galileo makes money for SoFi. So I just thought that was pretty cool, because I remember I was reading somewhere how SoFi could also be like the Amazon of like financial services and stuff like that. So basically providing like software for other companies to use that are within the fintech type of world. So I don't know, I think that's pretty cool. So imagine how, like, you know how Amazon kind of sits behind like a lot of websites. So a lot of websites kind of use Amazon for a lot of services, but Amazon is kind of like in the back end, which a lot of people don't like see it, but it kind of runs in the back end of Amazon, or like Amazon hosting or stuff like that. So Galileo is kind of like that, but for like companies such as Robinhood and Revolt and some other companies, and even competitors to SoFi. it runs in the back end. So that's pretty crazy. So anyways, here it says bank charter could be game changing. So this is pretty old, but they're basically implying that if SoFi actually starts doing their own bank charter, which they would be able to create cheaper rates and bring down costs and everything to their clients or members, that would be kind of game changing. And actually, I think they are already doing that. I forgot which company they're like acquiring, but I believe that's already happening, and it should be in place within this year. So continuing into this, basically they're just explaining how fintech is a big growing industry, and there's companies like Square and I believe Stripe and all that stuff. All those companies make a lot of money, and then they go over their financials, how they're growing year over year and stuff. So it's all looking good in paper, and overall, I believe here he's saying, or is it he, or whoever wrote this, they're saying how it's with his current price, it would be valued around like, or was it? It would be like a 14x based on the 2022 revenue, or 9x if they achieve the 1.5 billion and stuff like that. And then however, again, this is kind of old, so let me show you guys like the newest article. So basically here it shows you, because they just came out with their quarter earnings not that long ago, and it basically shows how they're still growing, 7 consecutive quarters of growing. So their members grew 110% year over year to 2.28 million. So they're just growing and growing. Like, thinking Q1 19 they were just under 1 million, now they're at 2.2. So definitely growing there. And let's see, it says right here, a quarter of strong growth. So not only did their membership grow, they also grew in revenue. I think this is their highest revenue so far. So grew of 151% to 216 million. So that's just for their Q1. If you were to like times that by 4, it's just like I think their guidance is 980 million for this year. So just shy under a billion, but that's pretty good. So basically, also I wanted to talk about this. So it says SoFi's lending segment accounted for 78% of total revenue. And then the other percentage was the Galileo, the thing that I was talking about. So I think it says here that it was up 4,513%, which is insane. And that's during this quarter. So it generates $46 million in revenue from just under 1 million in the year ago quarter. So that's a huge growth. And again, so they do like credit cards and stuff. So they're pretty much shoving like a bunch of almost anything you could do with finance related. They're like shoving it all within this platform, which is basically making it that one-stop shop type of deal, and it's looking really attractive. Now, one thing I wanted to cover, which I know that caught my eye at first, was their market cap. So if we go over to SoFi here, I think their market cap, if I scroll down, so I'm just in Robinhood right here. So see here says 2 billion market cap. So at first I was expecting this to be around 17 or 18 billion, because if I'm not mistaken, the outstanding shares as of now, it's about 850 million. So if you do 850 million times its current price, which is 22.85, let's see, does it show me 22.85? Why isn't it showing me? Okay, I don't know why Google is not responding right now, but I believe it's around 18 billion. So 18 billion market cap. So that basically means that you're kind of like, if you were to buy it right now, you're kind of buying it with a mindset of like it would be worth, or it's worth at least 18 times its current revenue. So if its guidance is expecting to be around $1 billion revenue for this year, then you're kind of like trading it at 18 times. So just keep that in mind. So at first I thought it was 2 billion, and then I was like, whoa, this is insanely low. But then I was doing some more research and I saw that it's 850 shares outstanding, so it should be around 18 billion. So 18 billion is actually not that bad. Or if you were to kind of look at something else, like let's look at Square, for example. So Square is another fintech type of company, and if we take a look at this, to show, yeah, so its price to earnings ratio is trading at 312. So trading SoFi trading at around 17 to 18 times is nothing compared to Square trading at 312 times. So if you're to compare, like, okay, what's more overvalued, like Square, just by looking at its price to earnings ratio, is more overvalued as of right now. So SoFi looks pretty attractive at this price. So again, it didn't disappoint. It rallied to 12%. Actually, what I did was I had bought in on Friday last week, and I bought in at around $19.60 per share. And I bought around 500 shares, and I sold like around here at 21.80. That's when I sold in the morning, because I was expecting it to like tank like most IPOs do. So I think I just made like a quick 1,000, sold, went back to sleep, and then when I woke up, I realized that it was still going up. So then I was like, it doesn't seem like it's gonna go down. It seems like it has strong support, and I haven't seen any bad news on this lately. And I feel like, if anything, the big guys are kind of raking in right now, while all the distraction is on AMC or GME and the meme stocks. So I feel like it still has a lot of room to grow. So I'm gonna get back in. So I got back in at the same price that I got out. So I didn't really like profit anything. But then, as you can see, it rallied even like some more. So that's why I'm at an extra 522. So it would be like 1,500 if I didn't sell, but see, it says average cost back at 21.81. So yeah, I decided to get back in, and I'm trying to do a long-term position with maybe at least 1,000 shares with this. So I'm kind of hoping it does dip back under 20. That would be great. But the way things are going right now is not looking like it's gonna dip. And I feel like it hasn't really rallied the retail investor yet. So I feel like it's still kind of early. Once it starts getting the retail investor attention, then I feel like it's going to rocket some more. Anyway, so let me show you guys basically what I'm doing. So portfolio-wise, if I go to portfolio. All right, so this is my portfolio. So as you can see, I have 500 shares of SoFi, 100 shares of ARK, 200 shares of AYX. I'm thinking of possibly selling 100 shares of AYX just so I can have more capital to play around with something else. But I also don't want to sell because I know that this is definitely in the oversold section right now. And then I have 1,000 shares of Palantir. I had 1,100, but I decided to cut out 100 just for now, keeping it at 1,000. I do have some calls still with Palantir that I'm waiting to be in the green. This is in the green actually. I don't know why it's showing up red. It shows up red here on the desktop, but on my phone it's like plus 60. So basically what I'm doing right here, for those of you guys that don't know how options work, or at least selling puts and stuff, basically what I'm doing is I'm using around I believe it's 9,000, something like that. 9,000. Actually, let me click on it. What's the collateral? Does it show here? I don't think it shows the collateral. No, it doesn't show the collateral. But basically what I'm doing is I'm using like around $9,000 to make this option play. And basically what I'm doing is I'm saying that I believe SoFi will stay above $19.50 by this Friday. So that's when it expires, this Friday. If it stays above that price, I'm just gonna collect $125 for free. So as you can see, I already collected $60 because SoFi continued to go up. So I could have cashed out the $60 today, but I'm just gonna wait anyways till Friday. So if by Friday it's 1960, then I don't have to do anything. I just collect this 125 and I get my money back that I basically put down as collateral. But if it does dip to 1950, then I'm basically gonna keep this $125. I still gain that much money, but I'm gonna be forced to buy 500 shares at this price, 1950. The reason it's 500 is because I'm doing five contracts, so each contract is 100. So I would be basically be buying 500 more shares at this price, which is fine because like if it dips, then I get in with more at a cheaper value, and I still collect this 125 even if it dips. That's basically what I'm doing. So yeah, so all in all, it was a good day with SoFi. I do expect this to continue to rally based on like what's been happening so far, and it doesn't seem like there's any bear case as of yet, or at least not a strong bear case. It was a really good rally today, and I feel like once the retail investor starts getting more or exposure to this, then they're gonna start coming in, and then that's when maybe the hedge funds will start coming with like the BS articles, you know, saying like it's overvalued and then like bringing down the price or whatnot. But all in all, it's looking good. And one thing that I forgot to mention is I'm surprised that ARK didn't buy this. I know they're heavily invested in Square, but like just looking at this technology and looking at the numbers, like 3-year growth and everything, I'm surprised they haven't bought into this. But then again, they didn't buy into Palantir right away. They bought into it a little bit later, so we'll see what happens. But if you like this video, please give a like, comment, subscribe. Appreciate it, and I'll see you guys in the next video.